is Gary Sandlund coming from the CME Group to talk a little bit about what's taking place in the agricultural markets as of late. And as people can see, we're starting to see a little recovery from the doldrums of what we've occurred during September and October, and we're starting to come out of that here as we move into November and December. The prices have recovered a little bit as there's rumors and speculation that China has washed out a tremendous amount of bean purchases over the last few weeks during the big slide. What it appears to be is that's more of a renegotiation of contract, and they're continuing to buy our old crop or our supplies of beans and building their supplies as they see fit. South American weather is always on the radar now as we move into their growing season. By and large, it's still pretty good. They're still looking at near record crops, both in corn and beans, but there are pockets to start paying attention to. And as if everyone remembers last year, in 2011, December is when the drought and the problems really started to occur in Brazil. So obviously that's something to keep on the radar screen. Moving forward, obviously, even though that we had a much better bean yield than what we occurred or we were anticipating during the summer of the drought here this past summer, the supply side is still very tight. So the South American growing season will be critical. Corn seems to be stuck in a range from the $7 to near $8 range. As we get down to the $7 range, we're doing export business, which we really don't need to be doing. As we go up to $8, we start rationing things from the ethanol industry and things along those lines. And wheat is obviously something to keep a close eye on, as the plains are still extremely dry, driest over in a century. So as you can see, there's still a tremendous amount of things to be paying attention to, and the price movement and volatility will still be extreme as we go through the holiday season.